Maybe you, like me, have been thinking, hey, I don't have all that much exposure in my local bank account. I don't keep that much money in my checking account, and I don't really have my savings there. It's all at my brokerage accounts, and I have several brokerage accounts. And I thought, well, they're pretty safe, aren't they? And then I thought, well, wait a second. The government is offering me this SPIC insurance up to $500,000 on my brokerage accounts. Apparently, they think there's some risk there. Maybe I need to look into it and see what is my level of risk and who am I dealing with. And I know that some of the companies, some of the brokerage accounts are actually private companies and others are public companies. The public companies, I think I probably can get access to their financial statements, but I don't think I can on people like Fidelity. So I spent some hours, quite a few hours, on putting together an analysis that I want to share with you because I was concerned about my situation and I really need to understand this SPI insurance and how it relates to my IRAs and my joint accounts and my trust accounts and that sort. So I put together an extensive Excel spreadsheet, much like the Excel spreadsheet I did here on the bank analysis, and I want to share it with you.
Best of Us Investors presents Kerry Griegmeyer.
So here's the study I put together on an Excel spreadsheet that is tied to Microsoft's stock program. And I looked at the brokerage accounts. Again, as I said, there's all kinds of fervor right now about failing banks. And I look back to the subprime crisis, and brokerage accounts failed at that time. So it's realistic to think that maybe there'll be another Lehman Brothers or Merrill Lynch had to be rescued by Bank of America. So I thought it's important to understand, number one, the rules and the insurance. And again, as I said, if they're giving us insurance, somebody thinks that there's some risk here. So we need to be aware of it. So what I did was take and find the biggest accounts. I've got 12 of them here. And analyze it and come to some conclusion. And as you can see, I've listed them based on the assets under management, all the way from J.C. Morgan, who has about $3.7 trillion under management, to Moo, who has about 13 million assets under management. Then I showed their growth or decline in assets from 21 to 22, and you see that the biggest drop, Charles Schwab and Fidelity, 17% drop in assets. SoFi actually grew. Moo went down a bit. JP Morgan went down a bit. Then I'm listing here the number of accounts that they had under management. Again, this is information that I'm drawing and searching throughout the internet to find. The one that sticks out my vision is Robinhood had a 13% drop in the number of active accounts, which doesn't really surprise me, but it had an 18% growth, according to the numbers I found on Seeking Alpha, in their assets under management. So that's kind of an anomaly. And then you had SoFi, who has grown 107% in assets under management and 48% in the number of accounts under management. And this is a startup, and maybe that makes sense. Then what I did was go in and say, well, how is the market reacting to these accounts? And you can see I have their current price and their 52-week high, and this is how their stock has performed relative to their 52-week high. Bank of America down 37%. J.P. Morgan up 12.8. It looks like Charles Schwab. This is interesting. I have a Charles Schwab account, so that lit me up. Down 39. I'm not really familiar with Ally. And then the online accounts are showing some significant drops in stock price. Now, some of them you see that don't have a change. That's because they're private. They're a private company. Edward Jones, Vanguard, Fidelity, and Webull, and then and I guess that's the private companies. That concerned me, because that basically says I don't have this other information available as to their relative strength. They publish their assets under management, but I don't know their liabilities, and I don't know their revenue, and I don't know their profit margin. So that concerned me. Here's another thing that concerned me. There's two of these that are Chinese companies. And I got to thinking, all the news that I'm seeing about TikTok and how they have access to all our information. Well, if you want to talk about somebody who has access to your information, and that is Chinese, that would be Webull and Moomoo. I mean, TikTok doesn't know my bank account number. They don't know my Social Security number. They don't even know my address unless they ping my app, and they can locate where I live. I don't know about that. So this would concern me. This would concern me that a Chinese company has access to all my financial information, and then has an app on my phone. If you watch the series FBI on Paramount and CBS, that phone really makes you open to anything and everything. And I don't know the extent of exposure. And as I say, there's a lot of talk about the exposure through TikTok. The exposure through Webull and Moomoo is much greater. Okay, again, the assets, the liabilities, percentage of assets relative to liabilities, and actually, they're all pretty tight except Robinhood and SoFi seem to have a. And I guess that would be probably because they're strictly online, and they don't have a lot of brick and mortar, so that could have some reflection there. And then again, their revenue and their net income. Again, a concern. SoFi is a startup, as is Robinhood, and they're losing money. Is that a concern to you? Is that something you should consider when you're saying, okay, these are my brokerage accounts, and then their profit margins accordingly? Then where I wanted to go was my concern. Somebody thinks there's a risk there because, as I'm detailing here, the SIPC has coverage on all of your brokerage account up to a limit of $500,000 in cash and securities per account. The SIPC protects also includes $250,000 in cash. Now, what that is basically saying, the amount of coverage is $500,000. So, if you have $500,000 in securities and $250,000 in cash, the $250,000 in cash is not covered. The total maximum of your insurance is $500,000. The total maximum on your cash is $250,000. So then I got to thinking that 250 is basically what's available to the insurance on my bank account, and so I kind of understand that. And then I said to myself, there aren't a lot of us who have 250,000 in a regional bank account or even a national bank account. That's for businesses. They keep that kind of money to make payroll and things of that nature. No, our large assets are going to be over in our brokerage accounts, at least in my case, or if I have a financial advisor. And we're going to explore that in another video, because there's some different ramifications there. But what it says, each of these securities is covered with the SIPC calls for separate capacities. In essence, separate capacities are just different types of investment accounts. So if I have, as I do, at E-Trade, which is part of Morgan Stanley. Yes, up here at Morgan Stanley. I have an individual account. I have a joint account. I actually have a trust account. I do not have yes, I do have, at Schwab, I have a corporate account, and then I have an IRA, and Nita has an IRA, and we each have a Roth IRA as well. Then we don't have any accounts that are held by an executor, but we do have a trust account. So each of those accounts separately are insured for $500,000 because they are individual separate capacities. Now, what I learned, though, was in my case and in Nita's case, we have over $500,000 in our IRAs, in our traditional IRAs. Now, what I've learned is I can't go to E-Trade and say, okay, take 200,000 out of my traditional IRA and move it into another traditional IRA. No, I cannot do that. I can only have one separate capacity, and a traditional IRA in my name is a separate capacity. So if I want to separate that 200,000 from the other traditional IRA, my traditional IRA, I have to take it to another brokerage. Okay? This is important. This is real important. Now, I've read a lot about this, and they say more than likely that the requirement for assets under management the auditors will make sure that if they have to liquidate, you're covered. Well, that's exactly what they said about the banks, that they're being audited and they're held to standards. But I do know that I believe it was last year that Robinhood became illiquid. And I haven't dug into it, but what I believe it is if they're heavy into trading options, and all of them are now heavy and shorting, they have to hedge their account. So if I short Amazon, they have to either through options or go and buy the stock in order to cover their exposure to my short. So that's what I think happened to Robinhood, that they became illiquid. So be aware of this insurance, and be aware if you're dealing with someone who is operating out of another country. Because again, think about that your Webull or Robinhood account, they become illiquid. Is it going to be as easy to be made whole through them as it is through Morgan Stanley? I don't think so, but I don't know because I've never traveled down that road. And then if you have a company that is already losing money, such as Robinhood and SoFi, you might be in a precarious position. I guess the point I want to make is it's important to know who you're doing business with and what their exposure is. Now, I take that to the next step. I have no information on Vanguard. Now, I don't know if I could write Vanguard and say, do you put out an annual report and put out your financial statement, and where can I access it? I don't know that. But I think it's important that we understand, as I said, who we're dealing with and what our exposure is. I think the one thing that really screams at me is I have my major IRAs at E-Trade, and I have some uninsured exposure, and I need to move that IRA to another brokerage account. Now, to me, that's just a pain in the ass. It makes it difficult to, keep things together. I'm going to have to build a separate spreadsheet that feeds from my two separate accounts to give me the information I need so I can manage them effectively. Now, that's what I came up with. This is another one of the spreadsheets that I'm going to have on my website once I get it built out. And as I said, the beauty of what I've discovered is I can make all these numbers attach to a database on the internet, so they update in fact as they change. If this, I'm doing this on Saturday, if we were actually doing it during the week, these numbers in current price would change about every 5 minutes as this screen updates. So that's kind of where I'm at that. Let's talk a little bit more before I say goodbye about your exposure if you're with a financial advisor. I was a financial advisor. I was with Ameriprise. There's all kinds of financial advisor accounts. What is your protection there? Because there you're going to be involved with a lot of mutual funds, annuities, insurance, different insurance products, maybe some limited partnerships or some REITs. What is your exposure there? Okay, I hope you found that as enlightening as I did. There's still some questions I have, particularly about these private companies and what kind of situation. And then I'm going to spend some more time digging into. I was a financial advisor. I was with Ameriprise, and we had accounts, and we put people in REITs, and we put people in limited partnerships and things of that nature. And I need to spend some time, and I want to do another video that digs into that. I mean, if you take your money, and Fisher Investments only takes accounts for over $500,000, what kind of insurance does he offer? And if you deal with a registered investment advisor who is not affiliated with a broker dealer, and he's basically independent managing your money, what's your exposure there? I think these are questions that we need to ask. And the sorry thing about this is we normally don't ask questions until our house is on fire. Yeah, I mean, the point at which you say, my God, do we have enough fire insurance, is when the house is on fire. Or after you wreck your car, is my insurance covering me? And who am I doing business with? And what is their track record? And what is their financial stability? I'm sorry to say, and I'm victim of it or guilty of it as well, is we don't really concern ourselves about the bad things that can happen to us until the bad things happen to us. Okay, I'm Kerry Grinkmeyer. I'm a retired financial advisor. I know I've gotten quite a few new people involved in my channel. Thank you for coming. Subscribe and join the channel. Be aware that we have a Discord. Our channel is more towards, rather than telling you what to buy today, to give you good information. So we have 3 goals: to help you make better investment decisions. 2, to help you learn the tax code so you keep more of what you make. And number 3, and most important, is to build family wealth. So when you leave this earth, you've made a difference for those people who you leave behind. Okay, go to the description. Find the link to the Discord, come to the Discord, learn more about us, and maybe we can help you achieve our 3 goals. Talk to you again tomorrow, I'm quite sure.